Hey, what's up guys? It's Corey here with Dapper Dollars, and today we're going to talk about whether or not Aemetis is on the way to a crash or a catapult. You ready? Let's get started. So, this channel is all about using the online income opportunities like merch by Amazon and Etsy to build our income online and invest this income in things like the stock market and real estate. If that sounds like something you're interested in, like and subscribe, and let's get started. So, Aemetis came out with their brand new 8K yesterday, and well, yesterday being Wednesday. And what this means is that we get to compare the 8K that they came out with back in late February with the 8K that just came out and see if they are truly on track to make $1 billion in revenue by 2025, or if this thing is just going to crash and Aemetis is going to fall apart thanks to relying too heavily on the government. So anyway, let's get started and see where Aemetis is at with all this stuff and whether or not they're going to be worth investing in the future. So we're going to start with the carbon capture that Aemetis is pursuing. And this is a new business model and revenue stream that they are looking at. And what it is creating or capturing carbon from the atmosphere and storing this carbon underground, basically so that it can be reabsorbed into the earth and basically not be in the atmosphere to reduce the effect of global warming, because that's really what all Aemetis is about, is reducing carbon emissions and now taking carbon from the atmosphere. So how we see it in the beginning of this presentation, and this is going to make sense a little bit later and maybe raise a few questions, is that it is a way of Aemetis to save money and not have to pay as much in taxes. This is great because it essentially takes the money that is at the top of the balance sheet in the form of revenue and allows more of it to flow down to the bottom as their total profit. And this is done by Aemetis taking advantage of the low carbon fuel standards from California and basically being able to be tax advantaged by taking carbon out of the atmosphere. And this is going to be a good thing for them, hopefully, moving forward. And again, we'll talk about that in just a little bit. So they also address the fact that they are now adding upgrades to the facility to start the production of jet fuel in the form of extracting sugar from waste wood in California from the almond trees that are burned every 20 years or so. So this is good because this shows that they are at least making strides to fulfill the promises that they made in their last 8K to start production of jet fuel in the future. Because whenever they made their projections last year, the jet fuel is a heavy portion of what is actually going to get them to $1 billion in revenue. And if they don't meet this standard, it is really going to be almost impossible for them to get to $1 billion in revenue. And likely the stock is going to suffer. But anyway, so right now we're seeing that they are actually making progress, or at least it is in the plans for the upgrades in the future, which is great for us, the investors, because it gives us a little bit of peace of mind that they are doing what they said they were going to do. And so this is good for Aemetis. And now we can see that they are potentially offering the carbon capture upgrades as well, because this was another thing that was put forward in the upgrades that they're doing to their facilities. But also, on this next slide, we can see that there is a little statement at the bottom of these graphs of projected revenue that we haven't seen before that says that Aemetis stands to make much more with the addition of the carbon capture through the low carbon fuel standard tax credits. And this is good because, like we said before, it takes more money from the top line and carries it down to the bottom line so that Aemetis at least can hopefully become a profitable company pretty soon. And so from this graph, we can see that it is definitely going to be helpful for Aemetis to keep this going and to at least fulfill their promise on creating the carbon capture plant. And now we can also see that there is a new revenue stream for the ethanol plant. Well, not really a new revenue, but it was an updated slide from their last 8K, and it is addressing the ethanol plant in the Keys facility, where they're targeting to make 15 million gallons of hand sanitizer, and they're moving forward with the elimination of carbon fuels, whether that is using their own fuels or the vapor recompression to actually gain energy production from the compression of the vapor within those facilities whenever they make ethanol or hand sanitizer. and they're also using solar power as well to take the weight off of their carbon emissions, and again get more tax credits from the low carbon fuel standards. Because right now Aemetis does still have a little bit of a reliance on carbon fuels within the company, and so any way they can take the reliance away from these carbon fuels is, number one, going to eliminate costs that they're spending on carbon fuels, and number two, going to benefit them with the tax credits that they get for the low carbon fuel standards. And so this is great because it's going to create potentially $8 million of EBITDA per year for Aemetis. And what that means is that Aemetis is just technically worth $8 million more this year than it was last year. And that's good, because if Aemetis does ever get bought out or sold, it makes them appealing, and for us as stockholders, it drives up the value of the company of Aemetis itself. And so that is great. And moving on to the next slide, we can see that they are maintaining the dairy renewable gas projections. And this is great because we're showing that they still have 15 new dairy digesters that they're targeting, with an additional 30 miles of pipeline. So this is where Aemetis has been for a while, and it is really one of the driving factors that got me into this stock. And from everything that they're putting out and everything that they've talked about recently, I think this is an admirable goal, and I think that they're going to be able to hit this standard, or not this standard, but this goal pretty easily, as long as they keep on track and keep focused. So this is good news. So far, so good. We're seeing great things from Aemetis, and then we move on to this next slide, and we see the new information of the carbon capture facility and how Aemetis intends for this to work. And this is where we talked a little bit in the beginning of the video that it's going to be confusing a little bit, because what the language they use here on this slide is not exactly clear as far as what was said at the beginning of the slide, the presentation, and what is said here. So anyway, we bring this up and we see that Aemetis is starting the outlining of what the carbon capture plant is going to look like. They say that no one else in California is doing this right now. And where we get a little bit tricky is where they've claimed that it is going to produce revenues of $500 million per year through the low carbon fuel standards. And that's where it gets a little tricky, because we are now banking on the low carbon fuel standards to potentially produce revenues. And really, it started out as, like we said at the beginning of this presentation, a tax credit and reduction of their taxes so that more money was kept in the form of profits. But now we're seeing that it is also tied to revenues. And so anyway, this does make a little bit more sense once we go on to the next slide, and it shows a graph or a lineup of a bunch of companies. And on the left side, it shows that the companies who are negative intensive are the companies that they can work with to profit from the low carbon fuel standards and doing the carbon capture. Because what they would essentially do is work with companies that are the low standards, and they would be able to work with these companies, collect this carbon, store this carbon, and then profit the difference, if that makes sense. So the companies essentially don't have that much as far as upkeep, and they don't have that much as far as carbon intensity going out, but Aemetis captures what carbon does go out and stores it underground with their carbon capture facility, and they get a tax credit for it. Now, what this relates to as far as this graph and the low cost or low intensity is that it might not cost Aemetis as much to store this carbon underground as the tax credits that they're getting back. So they would essentially maybe make like $100, or it only really costs $100 for them to store this carbon underground and put it underground, but they get a $200 tax credit from the government. So they would be creating revenue from this carbon capture. Now, I think you see the trouble with this is that Aemetis is heavily depending on this low carbon fuel standard to fund and create the revenue for this low carbon, or the carbon capture facility. This isn't a great position for Aemetis to be in, because it is putting a lot of reliance on the low carbon fuel standards and making sure that the low carbon fuel standards are maintained and this law stays in place, so that nothing happens to affect the revenue of Aemetis. Now again, if we look back at the $1 billion revenue projection that Aemetis made and put out there, we see that they don't have this as the a necessity for them to get to $1 billion. So technically they could do this without the carbon capture and get to $1 billion, but it seems like Aemetis is stacking one more thing on their already full plate to, I guess, create a little bit of wiggle room for themselves, because if they have the additional money from these low carbon fuel standard credits, then they're going to be able to absorb a little bit more as far as, you know, maybe potential missing of goals, and then make up for it to get to $1 billion with the revenue potentially generated from the carbon capture. This is just my opinion, but it seems a little odd. And anyway, I hope they don't build their business model around this, because obviously building a business model around a tax credit is not a great idea, but it's what Aemetis is doing, and so we can't really say anything except just, you know, with this video that I made. Anyway, so moving forward, we see that they are also making progress and continuing production of the feedstock. They are continuing the production of the waste wood, and all of these things seem to be on target as far as what we know, and they haven't mentioned any new information about this, which is good, because that means that they are at least on target, and we'll see in their upcoming quarterly report what the actual revenues are that they have come out with, and if it matches what Aemetis is putting out in this 8K, because we can see on the 8K that there are certain revenue numbers that need to be met in order to keep this plan going. And so when the quarterly report comes out soon, we'll be able to see if Aemetis is actually getting to that point, and if they're potentially using the low carbon fuel standard credits to make up for the loss that they might have. That is the only thing that I can think of that would be the purpose of having these low carbon fuel standard credits and carbon capture. But anyway, that's just, again, my opinion. I don't know this for sure. They might be in a great position. They might be beating revenues that they're projecting here in this 8K. But anyway, this is my opinion on the revised 8K that they came out with on Wednesday. I hope you guys are having a great day so far. I hope you have a great weekend. And just let me know what you think about Aemetis, if you're invested or if you would like to get invested after this. Right now, my cost basis is around $10 a share. I'm not wanting to bring that up anymore. I think I've got around 240 or 50 shares, so that's where I'm going to stay. I've still got a profit even with all this hectic stuff that's going on in the market, but right now I'm not going to be buying until we see more solid reasons for them to actually achieve this $1 billion in revenue in the future. So anyway, that's all I have for you. Again, have a great weekend, and remember, someone is going to do something amazing every day, guys. Why not you? See you.